Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Thursday edition of Benzinga's PreMarket Prep. Spencer Israel, Joel Elconin, Dennis Dick, Mitch Hotch with you this morning. Well, that was an eventful day we had yesterday. Wouldn't you say? I'd say it was pretty eventful. Back and forth market overnight here, but we're going to talk about the continued rotation that's been the theme for the last couple of days out of tech into the unloved sectors like energy and financials. And so we're going to talk through that. We've got a few other headlines on our radar. I want to talk Google today. I want to talk SKT today. Don't forget, we've got Jerome Powell speaking at around noon. We've got jobless claims at 8:30. We've got a couple of earnings on our radar. We got two guests today, Marc Chaikin at 8:15 and Buck Andrews, the co-founder of Inform, at 8:35. Today's show is also sponsored by Inform. To learn more, go to in4m.com. .info, excuse me. I'm putting the link up on the screen. Right there it is, in4m.info. Buck will be on at 8:35. Let's bring it to Joel now. And Joel, how are we doing in the overnight session?
Better than we were. We had a dip. We talked about last week's low at 37.80. Boom, 37.77.50. That's your pre-market low, rebounding, trying to get unchanged here, and that would be at 16.75. They're talking about putting more crude oil on the market, but crude is still in the green by 18 cents at 61.46. Gold fighting 1,700, hanging on for dear life. That's up 350 at 17.19.40. Silver going the opposite way, just hanging over 26. That's down 17 cents at 26.21.5. And Bitcoin, it had to stay over 50,000. Now back under 50,000. The futures are down $1,540 at 49.360. Now, before I'll bring you in Triple D, and Triple D, I know you're busy, but I want to perhaps go on one of my worst tangents ever, and it will be brief.
Please, Lord, make it brief.
Yes. Okay. So, you know when you see somebody on TV or on the street and you think that they look like somebody else?
Yeah.
Like, who does that person remind me of?
Yeah.
Okay?
Yeah.
All right. And I'm a little off. 2 out of 3 people agree with me on this. Okay? Who does Kathy Wood look like or remind you of?
You know, I've also thought that she has a very familiar looking face, but I don't have anyone in mind. I don't know who she looks like.
Can you see my screen?
Oh.
Bring it up.
Wait. Let me make sure it's appropriate before I bring it up on the screen.
Look at that.
Producer, this hasn't been thrown through.
Who is that?
That is
that Claire Danes?
Yes, Mariska.
Oh,
Hargitay.
Mariska Hargitay from Law and Order?
The Law and Order girl?
Yes.
Okay. I guess,
what do you think?
Is Kathy going to bring us Law and Order?
I guess
Look
I
at
could
this.
see it.
Come on. Am I crazy? Come on, guys.
I guess I could see it.
Yeah, I could see it.
I guess
the hair is the same. Go back to the
That's
hair.
what
It's
Lisa
the hair.
said.
I guess I could see it.
It's
Lisa
the
told me
hair.
not to do this.
Told me not to do this.
Maybe she
Sometimes
was
you should
right.
listen to your wife.
Maybe she was right.
Emily said, I don't know.
Okay.
And Dana said, you're crazy.
Okay, whatever.
The hair is the same.
Whatever.
Okay. And then here's a trivia question, and I doubt anyone's going to get this. I doubt we have anybody this old in the chat. Okay? Are you guys ready?
Yeah.
Who was her mother?
Wait, whose mother are we talking about now?
Kathy?
Marissa.
Oh, I don't even know. Yeah, she had like an actress mother, right?
Oh my Lord, Spencer!
Yeah. I don't know who it is, but she had
Somebody famous?
But her mom wasn't.
famous.
Her mom was an actress.
Famous
Oh,
in your time or famous in our time?
Even before my time.
Before your time, you're going back to the 19th century here. Okay, who was
No,
it?
come on, guys and gals. Come on.
You want to tell us?
The suspense is killing me.
There we go.
Oh, now he's going to bring up her image? Gee, dear lordy.
We're learning everything about...
What is this?
Jane Mansfield.
Okay.
She was
I've
like a
seen that
Marilyn
person
Monroe.
before, but I would not know who that is.
Okay.
No, somebody, the chat was all over it.
Oh, man.
The chat was all over it. It's a smart chat.
We're 5 minutes in. We're already way off the rails
chat knows
here.
that this is the worst tangent. He's right. This is one of the worst tangents we've ever
Okay.
Bring us in, Joel.
Bring us in.
Bring us in.
I get something in my mind, and it's like I couldn't think of who it was.
Yeah.
Emily used to watch that show, and I'll tell you, it scared me. What is it? Law and Order Special Victims Unit or something?
Yeah, Texas Linda got it. Duncan Dave got it. A few people know. And
Okay.
we're
Okay.
All right, go.
Good
Go,
job.
Triple D. You can talk the rest of the show.
I can talk the rest of the show. What do you want to talk about? I don't even know where to go now. I don't know how to segue over into the markets after
You
that.
know what?
So.
You kind of confused me yesterday.
Why?
Let's start because when you were on we were on the late show with Raz and everything,
Yeah.
and I was listening to you, and you were like, "Well, you're selling the rip in the reopening stocks, but you're really not buying the dip in the growth stocks yet, and you're talking about rotation." I need more clarification.
I'm
rotation.
basically, and this is the long-term investing hat on, because in the trading account, I'm always buying dips and selling rips.
Okay.
I'm staying somewhat market neutral. I'm market neutral again, equal shorts, equal longs. But in the long-term investing account, I'm leaning more towards just lightening up still, not looking so much that I'm jumping in this market and buying hand over fist. I've been using rallies to lighten up. And I really believe yesterday's rally in the value names. Let's take looking at the and the lower
Give me
PE
names.
stuff.
Give me some names.
Well, look at the banks. The banks have been on a hell of a run. Money is just flying into the banks. J.P. Morgan near its all-time high. Citigroup breaking out. And then we were talking about energy. They've been a great run in a lot of the energy stocks. I think as a long-term investor, it's time to lighten up in these things, because here's how it goes. Money right now is coming out of growth tech because they're getting hammered in it. And obviously, they're getting hammered in it, but at the same time, there's still, as I'm talking about that, other things are going on, but they're getting hammered. So money is coming out of growth. We know that. Money is coming out of growth, and it's looking for a home. And that home it's looking for is, right now, it's moving into value. It's been moving into value here for the last, month, really. But, right in the yesterday was very pronounced. So it felt like yesterday, it's like, okay, eventually, if it starts to really get ugly, it starts selling everything.
Correct.
So there are so many stocks that are just sitting up here making new highs. Like yesterday was a day that looked really ugly for a lot of growth investors, but the advanced declines were almost even. The Dow was basically, it was almost up. It was flat. So it wasn't a bad day for a lot of stocks. So I just think if you've been sitting and hiding out in a lot of value names here, they've had a great run. Maybe it's time to lighten those up too. I'm reducing risk overall because I just don't know. So I'm not coming in here and saying, sell all your stocks. I'm saying if you're really heavy, I think it's still, a lot of unknowns here. And I think you use the rallies to lighten up. So I'm not selling growth stocks yesterday into the decline. You know that. I was selling growth stocks last week. I was talking about it. I was taking a lot of heat from it, from people on Twitter, from people on chat saying, you're wrong. We're going to 4,000. The people are just, giving me a lot of heat. But I just think there's too many unknowns here right now. And the market is very overbought. So that's why I'm using the rallies in everything. So we had the beautiful rally in all the value names yesterday. I was lightening up into that. Now, am I getting rid of everything? No. But I just think you use that opportunity to lighten up.
Much better. Yeah, much better.
That's kind of what I'm trying to say.
Yeah, no, it was good. It was good because, and that's kind of the way I started the pre-market show. And Mitch asked me, like, where's the money going? And I'm like, it just kind of feels like, it's definitely not going into treasuries. I mean, this big interest rate interest rate hike, like, where are we going? Like, are people pulling out of their money out of the stock market to put it in, interest rate bearing instruments? No, but that confirms it. So thank you.
It's hard. I mean, this is a very tough market, and maybe this is just the market. This is just going to be another buy the dip opportunity in the growth names. I mean, there's been some great dips. If you don't have any growth, So it's a matter of your own personal situation. Look at your portfolio. If you were all value names and you're like, you're winning right now, I think you reallocate now, and maybe you move a little bit more into growth. Like, keep it balanced. Keep that balanced portfolio going. So I've been trying to do the balancing act here for too long, obviously. So if I was just all in growth, I'd be kicking butt like Kathy Wood was for the last 5 years. But I've always kind of remained balanced because I know this, this market will rotate, and I want to be benefiting, from both. So I think you keep balanced. But the question is, are we going to, really get ugly here, or is this just another dip to buy? The odds are it's just another dip to buy. But I don't know that it's not the start of something bigger. So that's why I don't want to be all in on all these stocks right now. I don't know that. That index is, SPY is still healthy. SPY still looks healthy. Rotation keeping it up. QQQs look a little bit worse because we took out the 310, the 311 on Qs.
Exactly.
We're trading down. It looks a little bit worse. It looks heavier. It looks like we got a few people caught. It looks like we're going to 300. Are we going to bounce off 300? Maybe. A lot of these tech names aren't ridiculously overvalued either. So, some are, but some of the big names that are really making up the queues, like your Amazons and your Apples, aren't crazy. What's really been hammered is those little, it's the Kathy stocks, really, what's really been hammered. The stocks that, are the high growth names, the Zooms, the Pelotons, and jumping into Fastly like we were talking yesterday. There's a lot of names that have absolutely been hammered. And some down like 30, 40, 50%, some holding up better than others. But you can't get overall nervous on this market until you start seeing stocks, get sold across the board. There's still pockets, like the market, you're right. The market's not just rotating out of stocks. It's staying within stocks, and it was just rotating into value yesterday. I just saying I don't think value is the place that I want to hide out here for the long term. The short term, maybe a few days, maybe. But even that, I think I'd be lightening up into the strength.
All right, I'm going to say one bullish thing and one bearish thing, and then we're going to let Spencer take it away, and we're going to cover some stocks.
Mm-hmm.
Okay, here's my bearish thing. We're hanging out here too long. Okay, we had Friday's low at 37.80. We hit 77.50 overnight. So for this to be like the ultimate buy the dip before we go back to 4,000, we're just hanging out here too long. So I'm not buying the dip, leaning on the 77.50 low. There might be another entry point, but no, I don't. We're hanging out here too long. I'll just give an example. CRM, okay? It came down. It just hung out too long. Yeah. Closed at 13.5. Those are the kind of scenarios that I'm looking at. The bullish thing, and someone, Mario Rodriguez, it's pumping Powell. Pumping Powell, baby. How could you be short this market when that guy's speaking? I mean,
well, he's going to do what he can to defend the market, but
yes.
Again, you also don't have Trump behind it. You have Biden behind it.
I love him to pop this market. I love him to 30, 40 handles.
People are getting worried that he, and it's rightfully so. Tim Seymour saying on CNBC, I think it was yesterday. I mean, everybody's been saying it. Does he control the long end? No, he controls the short end. So if you start losing the long end, rates start going higher, that's not good for stocks whatsoever. I'd love it, if rates went higher. And if you're not a borrower, it's your saver. You like that. You can start. I have nowhere to put money. I have nowhere to put cash because the rates are so low. So I can't go in and pound money in for 1%, 1.5%. I'm losing to inflation, so I have to stay invested. But if interest rates were to take off to 5, 6, 7%, this is the fundamentals behind it. The macro picture. If interest rates were to ever get, I don't think they're getting to that, but you can't ever say never. We know in this market anything can happen. If interest rates went back to 5, 6, 7%, savers who are now been forced into the stock market come out of the stock market and then go into those safer investments.
No way.
So
5-6%. Never.
No, that's what I'm saying. I don't think so, but we can never say never. If GameStop can go from $20 or $5 to $480, we can never say never. If interest rates, this is the fear right now. So we're just outlining the whole macro picture.
Sure.
If interest rates were to climb substantially, the stock market would absolutely get hit. There's no doubt, because there's so much money hiding there. There's no place else to be to fight inflation. You cannot put your money in a 1% treasury bill and expect to keep your purchasing power. It just doesn't work, because we know even posted inflation rates are up to 2%. We know for real, when you start including housing and energy and food, it's 5, 6, 7%. We've had Gil Morales on this and said if they calculate the way they did back in 1980, we'd be running 8 or 9% inflation right now on the current rates. And that's not saying, prices can continue to escalate. That's why money is trying to find a home everywhere, because it's worried about inflation. And maybe that is what continues to drive us. So as long as interest rates stay in check, then the markets probably, the money probably buy the dip as the opportunity. If for whatever reason interest rates they continue to go up, the long end continues to go up, that's where stocks can really start to get punished. So that's the overall picture. Now, take it down to the micro, take it down to the individual stocks. We've had a hell of a sell-off in a lot of growth names. I mean, you brought up CRM. I was in it. I sold it because I was spooked. I sold it a little bit early. It's 250. It's 206. I think it's got a little more pain ahead. But there's names out there that have been hit pretty hard, and maybe you start thinking, and the problem is valuation's still nuts on all these things. Like Fastly, it's down from 120 to 68. It's done this before. 120, it did it back in the summer, but 120 to $68 is basically almost a 2-for-1 stock split in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 days. Fastly has been cut in half. That's an impressive sell-off. So is it going to bounce at the 60, 62 where it did back in October? I think so. You're only $4 away from there. So is that a stock that I would maybe try to buy on the dip? To think maybe the first time you bounce off that hard floor from 60, 62? Yeah, I think so. And you might get a shot at it today if it gets ugly. So there's pockets where you can look at and say, okay, I think I got a level here. But just to come in randomly on any stock and say, well, I'm just going to buy this because it's going back up. I mean, you want to have a level, and if it takes out your level, it's still risk management. You got to get out. So, Spencer, you're sitting back. You're a young guy. What are you looking at? Are you looking at buying the dip? Because there are some dips on some major growth names here, significant dips. I mean, Fubo has dipped significantly. You can go across the board. My SunPower, which I sold, has basically been cut in half to a certain extent. I mean, there's a lot of names that are down 30, 40, 50% in a couple of weeks. These are
Before we go to Spencer, I want to say one thing. Okay, I just don't want to be flat out long. It is, rates going up is going to be incremental. But the first time Pumpin' Powell says something about, the rates, oh my Lord, we're going to be immediately limit down. Once he says it, because right now he's like 2023, 2024, 2030.
Can I bring
once he says?
Marc Chaikin has comments on this. So
I'm sorry.
No, it's okay. It's okay. Marc Chaikin is the founder of Chaikin Analytics. He just messaged me and he said, or messaged us. He says, Operation Twist 3, Part 3 is incoming. Marc, maybe you can explain what Operation Twist 1 and 2 were.
Well, 1 was back in 1971. 2 was 2011. Basically, it speaks to what Dennis was talking about. The Fed is in control of the short end of the curve, but not the long end. In a twist operation, the Fed starts selling long bonds and buying short duration bonds, and that controls the curve, which is what's troubling the market right now. Whether they do that or not, I don't know. And
so it's an operation for the Fed to help the long end as well, so try to get control of that too.
Yeah, exactly. And to speak to what Joel was just talking about, Powell has been magical at staying on message, but he's entitled to a stumble here. And he's speaking today at a Wall Street Journal conference. It's the last time he speaks before the March Fed meeting, middle of the month. So yeah, I mean, we're a bit dependent on Powell staying on message, but I wouldn't bet the ranch on that one.
I mean, Marc, what are your thoughts here? This has been a fantastic, basically 10-year run. If you take out, March, we've had some pockets of weakness, but really since the financial crisis, if you want to go all the way back there, it has been an impressive run. And obviously in 2020 was a very impressive run from the COVID lows. What are your thoughts here with this market going forward? Are we just tired and we just need a breather, or is this the start of something bigger?
Well, I think we're tired, and I'd be an aggressive buyer between 3,650 and 3,700 on the S&P. So I think we are going to break those recent lows. But based on earnings power, and the big banks are playing follow the leader, raising their estimates based on an estimate of about 185 S&P earnings this year, maybe 200, 205 next year. We could trade at 5,000 on the S&P if rates don't do what they've just done. The level of interest rates historically has not been as important as how fast they move. So what's spooking the market here is how fast they move.
Yeah.
There's a big J.P. Morgan study that was out about a year ago reiterating something they said. Rates can go to 4 to 5%, which is pretty much the norm if you're in a strong economy, and the market can deal with that. It'll take a haircut on the growth stocks. We're seeing that in a very short-term micro sense, and it'll favor cyclicals. And so we're seeing the market play out just as it should be in a rebound from an unbelievable trough in the economy.
So you think basically, let's just say you're an investor, and we obviously don't give investment advice, but let's just say you're an investor here. You're sitting, with a lot of growth names, that have been hit pretty hard here. You think you ride this out, is what you're saying, or you keep a little bit of cash for obviously the opportunity, or do you like liquidate and saying, okay, we're going lower, I'm going to sell everything, I'm going to rebuy it all at 3,600.
Well,
what do you do as the individual investor here?
It depends on the name. You've rightly identified stocks like Zoom and Peloton that have gotten hammered. Chaikin power gauge rating on Zoom has been bearish for 5 months.
Yeah.
So the time to sell it was somewhere between 400 and the earnings report spike at 450. In the aftermarket.
That was a gift.
Tesla, the time to sell it is behind you if you're taking a longer view. Peloton, same thing. All these stocks.
What about Tesla going to 2,000? That Ron Barron said it's going there.
Hey,
but yeah, Ron Barron sold 25% of his position too, though.
Yeah,
so.
And where's Bitcoin going to top and then put some pain on these balance sheets? So it's a funny market. If we didn't have interest rates at zero, I'd say that the Buzz ETF, which is starting to trade today, would be the equivalent of ringing the bell at the top.
That's interesting in itself.
Dave Portnoy. By the way, Benzinga was mentioned as one of the sources they're going to be mining with their AI programs for investors.
And I'm going to reach out to Jamie Wise. Was on our show back in 2016, shortly after Buzz Indexes launched, and we're going to get Jamie back on the show. It's on my list to reach out to him. But So yeah, Buzz, they're launching a new, for those who don't know what we're referencing, new ETF starts trading today. Buzz Indexes, I think Dave Portnoy is involved in the ownership in some way, shape, or form. It's basically just mining or scraping websites and social media for trending stocks, and
they're looking for Reddit stocks.
That's the strategy, basically.
They're looking for the buzz. They're looking for social media driver.
So, like this morning, for example, maybe they would be looking at SKT. Maybe they wouldn't be, because maybe we can get into that in a second.
What's the SKT story this morning? Is this Reddit?
So I'm convinced now that it's not actually Reddit. It's people that are scraping Reddit. Because if you go to Wallstreetbets and you try to find Tangier or SKT, you have to look for it. It is not on the front page of Wallstreetbets. There was a post from yesterday that had 800 upvotes, which is basically zero in Wallstreetbets terms. And yet they're saying, "Oh, this is the next Wallstreetbets stock. This is it's going short squeeze to the moon," and it's up a lot. But I think this is people that are scraping the subreddit for mentions of the stock. They see it tick up and they jump in. I don't think this is actually Wallstreetbets people.
I mean, we already had a short squeeze in this one too.
That's my opinion.
We're doing it again.
I actually have an alert service that sends you one stock a day, and they sent me an alert on Tangier at about 3:30 yesterday.
Yeah.
Who was that sent that?
Well, you don't want to promote someone else's service on the show. But,
so it was
no,
an
he wants to sign up
service.
for it.
What was the alert all about? Was it like a Reddit thing? Like it
they're
said
monitoring
that this is the next...
social media posts. I'll tell you, it was
I've got one right here.
It was like Folio. They're doing a good job.
Like Folio's been on. They've been on our show.
They've been on 100 times.
But this is a new service they have. That's one stock a day based on social media buzz.
Yeah, and so
was the stock 2 days ago Rocket?
It was.
Was it?
Yep, 3 days ago. Yeah, before the move.
Well, is this okay? So we got to obviously subscribe to this. This is like
and guess what? It's only $19 a month.
Okay, well, I'm going to pay $19 a month. Man. What is it called? Folio?
Right. Well, like Folio, but it's their stock of the day service.
Like Folio.
Andy Swan, right?
Yep, Andy and Landon Swan.
We know Andy.
This is indicative of where we are in the market cycle. This is 1999 heading
Yeah.
into 2000.
Yeah.
And we don't know where the top is. There's going to be really choppy action. Go back, and you've talked about it on the show, Dennis. Go back and look at what stocks did, and NASDAQ stocks did in 99 and 2000. You could have called the top, been right, and then
Lost your
money
tokens.
on your short sales because there was so much upside volatility.
Oh, it got silly. I mean, like I was like the cable internet I was talking about 2 days ago, Excite at Home, ATHM, and it bought Excite. And the stock went from $5 to $200. So it was overvalued at 20. It was overvalued at 30. It was overvalued at 50. It was overvalued at 100. It was overvalued at 200. It eventually went to zero. But man, if you were shorting that thing too early at 20 and 25 and 30 saying this is silly, it went to 200.
And
so, I mean, it is similar to that.
If you don't believe history repeats itself, my favorite poster child back then was Exodus. We had an internet stock market app, and we used Exodus as our hosting facility before there was AWS at Amazon. Guess who the CEO of Exodus was? Meg Whitman. Went bankrupt. Quibi. Who's involved with Quibi? Meg Whitman. These things repeat over and over again, 20-year cycles. So I think you've got to stay constructive on the market. I think this is the odd day when both Dennis and Joel are right.
We're usually on opposite sides, me and Joel.
I know, but I do think under 3750, as close to 3700 as you can stomach. And I do think you got to buy some of the cyclicals. You want to see a pullback in energy. You want to see a pullback in the bank stocks. But as long as interest rates are going to be top of mind for the market, you've got to be looking at some of the cyclicals.
I mean, I think just staying diversified too. Like, it's so many people who have just been crowded into Kathy names, and they're all in on Kathy, and they've got a portfolio of Kathy, and they're talking. I have people reaching out to me and saying, "Look, I'm down 30 or 40% in this stock, and I'm down 40% in this stock." And I'm like, you don't want to be all in on 1, 2, 3 names. Staying diversified with some value, with some growth. If you're an investor, I think that's the way to go. I know you've been underperforming because you look at your neighbor and he's been all in on the high growth names and he went up 150% last year, and you're like, well, I've got to do that. And you sell all your safety names and you sell all and now you're chasing into the growth names, and now you've been hammered on that too. I mean, that's all FOMO that's driving that. But I'm a trader and I will trade all that stuff, but my long-term investment portfolio, the stuff that I'm supposed to be retiring on, is very diversified. Some value, some growth, and it doesn't have any crazy names that are 100 times sales.
Nope.
And we haven't seen the Kathy effect yet, by the way. I think that's probably going to make the short-term bottom. Redemptions, and well, she's doubling down on Zoom and on Tesla and some of these other names. And when she gets some redemptions, a couple of these funds are almost 20% off the highs, the ARK funds. So individual names may be 30, 40%. There's a lot of pain that's going to be inflicted when she gets redemptions and has to be a net seller of these.
Let me interrupt you for a second. Didn't she, wasn't that, I didn't listen to her and Raz yesterday, but wasn't that part of what she was talking about, Spencer, was that's not affecting her investment horizon? Am I wrong, Spencer? Were you listening?
Well, I'm here. She's taking a longer term horizon. They don't. I think they're.
Didn't Kramer call her out and say what Marc is saying, or not? Am I mixing words?
Kramer told her to shut down her funds, which I don't know how
really.
I don't know how easy that is.
Because it was too much.
I don't know how easy that is.
Not shut it down, but to not allow new. I saw the tweet. Not
new money. You can't do that with
money in.
You can't do that with an ETF, though.
Yeah, closed end.
One of the fallacies
in
her. I didn't see the interview with Jason, but she did another interview with someone else, Business Insider, maybe about a week ago. She's comparing the bond sell-off in March, the bond ETF sell-off, and how there were bids. It's totally different dynamics. In the bond ETFs, they start trading at a discount, and nobody sells them, basically. They stop selling them. They don't ask for the bonds. So she's claiming that she'll be okay from a liquidity point of view, comparing it to that. Totally different. She gets redemptions of $5 billion to $10 billion. She's got to sell Zoom, got to sell Tesla, got to sell the names. Right now, what she's doing, and you and I texted about this, Dennis, she's selling the Apples, the Googles, the Amazons, where she parked money to average down on Tesla, Zoom, Square, and so forth. That's just that's a losing strategy. That only works in a big roaring bull market when you're getting inflows. So, it's just another piece in the puzzle that says be cautious short term and look for buying opportunities. But if there's a liquidation wave, that'll make the bottom.
Marc Chaikin is the founder of Chaikin Analytics, long-time market veteran. Marc, thanks a lot as always. Talk to you in a couple weeks.
All right, be well, guys. Dennis,
All right.
I'll see you on Twitter.
Couple things. First, thank you to someone in the chat who told me I was pronouncing the name of Tanger Outlets wrong. I apologize. It's Tanger. It's Tanger.
Oh,
it's not.
Tanger.
It's not. It's not like
that was French. Tanger.
No, I always thought it was like Tanger or Tangier. It's Tanger. So okay, thank you to the chat for that. Also, programming note: if you want one long all-day stream, go to Twitter or Twitch. We have one long all-day stream on Twitter and Twitch, separate streams on YouTube.
Just watch Benzinga all day.
Just you want to watch Benzinga all day, you don't want to do anything, Twitch, Twitter, hop over there. YouTube is where we're going to do the separate streams. That being said, it is 8:31. We have Buck Andrews on in a couple of minutes.
Can we cover a stock?
Joel,
Joel,
can you pull up SKT here? Because I just want you to look at
have it up.
Okay, great. Let me do that. Okay, SKT. So yeah, I mean this is what the services are saying. Oh, the mentions are going up on Reddit. Mentions are going up. I don't believe this is actually anybody on Reddit. This is just people tracking Reddit. Is what I think.
And you know what? You get an email alert, and it goes out to a lot of emails, and people will jump in on something like that, saying, "Oh, this is the next one." Everybody wants the next GameStop. They're looking for it. I mean, yesterday on CNBC,
it's already over. Look, 25.
Oh, listen to Spencer getting technical.
It's already over.
You're right. Yeah, you look
over.
at the pre-market chart. This thing got to 26.5. I mean, this is again the story. Sell your peanuts while the circus is in town. If you're lucky enough to be long one of these stocks that gets this 50% pop in a couple of hours because of an email, that is just pure luck. I mean, maybe you were in it because it was short squeeze, but whatever. If you're in it, let's just say not even lucky, you were in it, you thought, it was a short squeeze, this could eventually be one. I was in this SKT before too on the first time around. You ring the register. You sell your peanuts while the circus is in town. You don't sit around and waiting for the next one. I mean, I was in UWMC, another great example. I bought UWMC 3 days ago off of the Rocket because RKT started to go, and I'm like, you guys had told me UWMC is basically the same business. I was like, well, they could grab this one too. So I bought the UWMC, and it got absolutely silly yesterday in the pre-market, and I was able to get out. I sold some at 11.40. I sold the rest at 10.80, I think. So I didn't get 12. I didn't get the top. But I'm like, you got to know, like, okay, well, this is it. This is getting you. They're not all going to go up 200, 300, 400%. I think you're going to see these pockets where you get a day, maybe 2 days, but mostly 1 day. Most of them are going to be 1 dayers, maybe even a couple hours. And SKT had its moment this morning. So I think you're right. I think SKT eventually comes back down too. I would be a seller of rallies in SKT.
Let's do a couple more stocks here. You want to look at DraftKings? They had a headline this morning.
Yeah.
Another deal. So there was a deal yesterday with Dish, right?
Yeah.
There was a deal this morning with UFC. So DraftKings is going to be the official sportsbook of the only sportsbook of UFC, and their daily fantasy partner in the U.S. and Canada.
I was short this stock overnight. I covered this at 6:30 this morning at 63.5. Wow, I got lucky because that headline came out at 7:30 and then the stock ripped. But it was down, when everything was getting hammered this morning. We've obviously bounced back significantly on the overall market, but that's what I'm just looking here and I'm like, wow, I got a lucky cover that I got up and I was like, okay, this is down $2 and I covered it. Now you're getting a rip on a headline. You saw this with Fubo last night. FUBO got a deal with something with Caesars. The stock ripped up. If you bring up the Fubo chart from last night, to $36, $37. You get so many bag holders in Fubo now that every rally seems to get sold. So you can see last night when I'm talking about that rip, right on the headline. It was after hours and ripped up to 36.5, and it got sold. I tend to think the DraftKings is going to be the same thing. There's so many people who are spooked on growth names right now and higher multiple stocks that they'll use this opportunity to lighten up as well. So I'm completely out of my DraftKings. I covered it. I almost want to reinitiate my short here. Though I say that, and then people say, "Oh, he's short. Let's
He's a
grab
short
this
guy.
one. Oh, let's get the shorts." But I mean, looking at this, I think it was an ugly candle yesterday. You get to snap back on a news. It's a nice setup for a short. So if I was in long DraftKings, I would sell it.
Are we bringing? Is Buck ready to come on? Because if not, I just want to say one more thing about these.
Say one more thing, Joel.
Wagering stocks.
Yeah.
I mean, I've done some wagering on individual games and basketball games and stuff many years ago.
Yeah.
I mean, aren't the reason these people are in business is because people lose? I mean, what happens? I mean, are people just going to keep, put $1,000 in, get $1,000 bonus?
Yeah.
Aren't eventually people just going to burn all their cash?
Yeah, but that would be if you'd say the casinos would eventually go out of business. With that, and the casinos
people will
still
go
in
out of business.
People bet money. I know people that buy lottery tickets every single week that literally take 10% of their money that they make from their paycheck, and they put it in lottery tickets every single week, and they lose that money every single week, but they still buy their lottery tickets. It's the thrill. It's the getting up and saying, "Oh, this might be my day. Maybe this is my night. Maybe my numbers are gonna hit." People like that thrill, and that thrill's not going away. So to say that everybody's gonna lose and they're gonna eventually stop, I mean, then the casinos would be all out of business. So I don't think that argument holds weight at all.
All it takes is $1 and a dream. All right.
Yeah, Las Vegas Sands. They got out of Vegas.
Joel's trying to find the casino.
No, I'm just being honest, guys. I'm just being honest.
Look, one word for you. Stimmy, or two words. Stimmy checks. Stimmy checks.
Well,
all right.
They go right. Yeah. People
they go stocks. Yeah.
Stimmy checks. Okay. Let's bring on Buck
People
Andrews.
like to gamble.
Let's bring on Buck Andrews, co-founder of Inform. Buck, are you gambling right now?
Always.
Buck's a gambler.
Don't we always gamble?
Yeah.
We gamble for a living, Buck. Traders, we're gambling for a living.
Exactly.
Let's talk about some of the trades you made this week. Tell us about what you've been up to.
Well, we were in Rocket.
And how'd that work out?
It worked out pretty well, but there was a better way to play it. So I wasn't in Rocket just because it was on the squeeze. I was in Rocket because it had some fundamentals behind it. So
the earnings and the special dividend, right?
The earnings, the special dividend,
right.
The lack of float was on the squeeze side, and so those made it interesting, right? And also Bill Miller was in that stock pretty big.
So tell us how you played it.
So we bought on we bought like not yesterday, the day before, and late in the afternoon. So we put an initial position on around 24, 25, somewhere in that range. Then we added to it that afternoon after the close, and then we added pre-market the next day. I like to take a position. If the position continues going up, I'll add to the position. I'm just kind of playing the momentum. And so that's what I did. And then when it got to 42, or near the close on yesterday, or the day before.
2 days ago, yeah.
Yeah, 2 days ago. I started selling at 42, started selling above 42. After the close, it ran up and dropped back down pretty quick. Sold about a third of the position, and I sold about a third of the position into covered calls and held the rest. So
hey, Dennis, I just want to mention this real quick. Did you guys see the 4 a.m. pop on this thing?
Yes, RKT today?
No. I'm talking about Rocket.
Yeah, he's talking about yesterday.
It went to
48.
Yeah, you know what? And
when did it do that?
I couldn't trade it.
I know, Dennis. I know.
Yeah, when?
Yeah.
No, I'm asking you when.
I'm
yesterday.
looking. It was the 4 a.m. open yesterday.
Yeah.
Wow.
Yeah.
Hey, you know what? For some reason, I can't trade that 4 a.m. open on Interactive Brokers. Is there a reason?
No,
there it is, Dennis. I got
Are you on IB Lite?
No, I don't think so.
If you're on IB Pro, you can. 4 a.m. it's there. You can. You have to just set a setting. You set it to, if you're on IB, because I know IB, you set it to I don't have it open on. It's a setting, and you got to set it to after hours. Like so,
Okay.
because your orders will automatically default to just regular hours. So you got to send it to like it's a 3-letter symbol.
It's funny. I can trade after hours, but I can't trade that 4 a.m. I can't trade till 7 a.m. for some reason.
No, IB is 4 a.m. So I've traded on IB 4 a.m. for years. So if you're on IB Lite, I don't know. If you're on IB Pro, which I'm on IB Pro, I've never been on IB Lite, so I don't know what they offer.
Yeah, well, I was trying to trade it. I was trying to get out, and I couldn't get out. I saw that also.
Yeah, 4 a.m. is
on the rest of it.
You can trade 4 a.m. on IB.
Yeah. So I held the bag all the way back down to 29 on the covered calls and lost a lot of money on those. But overall, I did pretty well. But I didn't do as well. I went back and looked at the covered calls that I covered with, and at the same time I was buying the stock. Those calls were trading at 30 cents. They went up 3,200% from 30 cents to like 12. Well, at 9 they were 3,200. So $10,000 would have made $320,000. Wow. So instead of having a lot of money, a lot more than that in the stock, I should have been in the options. Just the explosion there was.
Wait, so what happened yesterday though? Because you didn't sell all your position out Tuesday afternoon.
No, I still have some stock with the 40 cover, the 40
Okay.
the March 19th cover.
Okay.
But when the calls come down, you're kind of in this position. They've come down from 10 to 2, and what do you do? You're sitting there, and do you buy it back in? And because at that point, you're trying to be somewhat delta neutral, and you own a lot less stock. If the stock starts moving back up again, you're going to get burned unless you buy those covered calls in.
So what else did you trade this week?
I traded I was looking at Bitcoin, and I was looking at that 43 area for Bitcoin. And so when Bitcoin got down in the 43, 45 area, I went back into SOS, CAN, and Riot. So I'm trading those Bitcoin stocks around the movement of Bitcoin, and I'm using Bitcoin support as my entry points for those stocks.
That makes sense. Yep.
Wait, so explain that a little bit more though. So do you mean like Bitcoin futures, or you mean actual Bitcoin?
No, either one, because I watch both. I watch the Bitcoin futures and I watch the actual Bitcoin.
Okay.
Bitcoin futures don't trade 24 hours, so I like to look at the actual Bitcoin. I use TradingView for that.
I got a question for you, Buck, because I saw the 43,000. That was like on Saturday, right?
Yeah, right.
Early Saturday. So what do? You just get up and start buying it because because I saw the futures, and the futures looks like I had a good support at 45.
I bought Monday pre-market.
Right. Okay. Good. So you're using because I saw it. I'm looking at 45 support. This thing's trading 43. The arbitrage fact. SPOOs just went green here, folks. We're up 4 points to 2075 because Pump and Powell is coming on this afternoon, folks.
Yeah, they're going to try to keep these bonds from going any lower. That's for sure.
12:05 p.m. Eastern time. That's when the conference starts. I don't know exactly when Powell's speaking, but that's when the conference.
I think he's
starts.
supposed to speak at 12:05.
Okay, there we go.
There we go. So buying that on a trade, I bought Boeing this week, and
I bought Boeing this week too. Why'd you buy Boeing?
I like the because you're in the you've got this sector rotation going on.
Yep.
So literally the tech sector, these high flying techs look a little bit like a mini right now, look like a mini 2000 tech wreck.
Yeah, they do.
Yeah, and the SPACs remind me of 2000. We've got a lot of these companies being listed out there that have absolutely zero earnings, zero revenue. It's a little bit reminiscent of 2000.
Yeah.
So I think there's a bit of a massive rotation. So the only thing I would buy and even hold would be something like a Boeing, although I sold it. I'm not really holding anything. I sold out of the ARK funds. Because it was a very crowded trade. I actually was short ARK K against my ARK W, and when the ARK K came down, or the ARK W came down so much, it was kind coming close to my entry position. I've been in and out of it a bit, but I said, enough. I don't want to tie my money up in that right now because.
So what would it take for you to get back in? I'm just curious.
This tech situation's got to unwind, and I need to see whether this interest rate move is going to stop. Interest rates are going to stop going up. Treasuries are still weak. They kind of put in some support last week. They haven't broken that support, but it's still not a very, they don't look good. If you look at the NASDAQ, it's now down 10%. So, the charts, chart action does not look great there.
Yeah.
So I don't know whether this is something that's going to continue to the downside. Certainly, the policies of this administration are not favorable for the market.
Yeah.
And whether the stimulus can continue to carry the market with all these bad policy decisions is the question.
Buck Andrews is the co-founder of Inform. You can see it up on the screen, IN4M. Go to in4m.info to sign up for their site and see what stocks they are tracking. Buck, as always, we appreciate the time. Talk to you next week.
Yeah. Hey, guys, check out our charting app. We put in a charting piece into the application.
There we go.
Nice.
Thanks a lot, Buck.
Okay.
Thanks, Buck.
Yeah. Okay.
All right. Let's just cover very briefly the Cathie Wood buys from yesterday. No real surprise. We thought she probably was going to buy the dip on Zoom. That's exactly what she did. Let me do a.
How did she explain her bullish stance on that? I heard her. She said she was on their value.
She thinks Zoom is basically going to replace like the telecoms. That's what she thinks. She thinks Zoom is going to be way more than what it is right now. So anyway, they bought. Let me do some quick math. A little over 200,000 shares of Zoom yesterday in a couple of funds. Palantir as well was a big one. They bought looks like we'll just call it ballpark at 2.7 million shares of Palantir in a couple in the ARKK and the ARKW funds yesterday as well. So those caught my eye. What caught your eye? They did a lot of buying, right? What
caught my eye was last night. You typically see the Cathie pops in all these stocks, and there was none to be found. They are starting to buy them this morning. You're seeing a little bit of the Cathie pops this morning. You are seeing Zoom. Palantir got love from CNBC as well. There was a CNBC commentator that came on about 4:30 and said that he monitors Reddit as well, and he thought that Palantir was going to be the next rocket. And as soon as he said that, Palantir ripped $1 in like seconds. That's why algos are all over this. This isn't like your Reddit traders out there this fast. Especially on Robinhood where you have confirmation. There's a few traders in there that are pretty quick, but it's algos. They're all over it. As soon as it was mentioned, milliseconds later, Palantir is up $1 on that mention. And so that was a big deal for Palantir, obviously why it's popped this morning. And then obviously Cathie buys, it helps it along as well. So people are asking why the Palantir pop is there. That's the reason. But I don't know. It was just interesting that, Cathie, every night you look, this one's up 4 or 5%, 10% because Cathie bought it. And there was a lot of buys that she had bought before, and those don't always get as much love. But there was really nothing trading.
It was kind of the market conditions too, Dennis.
Not kind of. All market conditions.
Okay.
All market conditions. And this is what I was trying to say on the show yesterday too.
Mm-hmm.
There was a time, I was tweeting this for a week, I've been tweeting this. If you're buying Cathie pops, you were doing it wrong. Evil Dennis has been shorting Cathie pops. Shorting Cathie pops. Because it has been, the market environment where they're ripping a tech stock up 10% right now, and the charts have been like this going down. That's an opportunity. So, to get out of some more tech names. So, this is, the market that we're in. But, again, this can turn on a dime. A lot of these, what I'm trying to say is a lot of these growth names, a lot of these Cathie names have already been hammered. So if you're coming in now and saying, we got to get out of the Cathie trade, you're doing it wrong. You're doing it backwards. The time to get out was the last 3-4 days before yesterday's shellacking. Is it more downside ahead? There might be. But I just don't think, it's now you're selling the whole. So I'm not telling you if you're out just to hold on. You got to do your own thing. If you have too much risk, you have too much risk.
Yeah.
But I'm saying, I was preaching for the last week on this show that I've been lightening up growth, lightening up growth, lightening up growth. And finally, it comes to roost yesterday. You know, the one thing I do wrong is I think I read the
Timing.
market very well,
Yep.
that I'm really early. I'm really early on it. I'm very, like, it's a spiny sense. It's 21 years. It's the same thing with COVID. You know, I'm reading the tea leaves here, and I'm like, this is going to get ugly. It was a month too early. So, you know, I'm always a little bit too early on these feelings. But usually, you know, more often than not, I feel like my feelings end up being right.
Same.
And I've been
Same
feeling
here.
this gross sell-off coming. And it has given you warnings. You know, you've had a lot of warnings here. We got sold off hard, and then we popped. And, you know, and the SPACs have been absolutely hammered. The SPACs go down every day, no matter we're up or down. I mean, the SPACs have been really ugly. And like I said, I'm worried about the SPACs because you had that $10 floor on a lot of them. A lot of them are breaching it now. You start seeing some of these SPACs go through 10, people be like, I didn't know I could lose money. It's supposed to be 10. And it's still free trading. They can go anywhere. So don't just think because you got a floor at 10 that you're completely safe. You're not. So especially post-deal. So you just got to be careful with some of that stuff. But again, I'm not all out. I didn't sell all my SPACs. I sold some of them. I lightened up the risk. I lightened up the ones that were trading at a hefty premium. But I'm still in some that I like. If I like the management team, I'm still in them, you know. But I've been selling on the deals. I've been selling into the past because it seems like they're not holding on to the premiums. It seems like it's been the play. So
For like the Palantir, I mean, and I have this marked on the chart. You know, this is when, you know, she did some big purchases here and big purchases here. You know, at that point, you know, you got that, it came down hard off earnings. You got to understand, folks, this thing came down because of fundamentals. It was coming down before the market came down. So now there's more people here. Oh, man, if this thing gets back to 30. Oh, man, if this gets back to 27.50. Oh, if this gets back to 26, you know, it's that mentality. Now, long term, this could be, you know, a 50, 70, 80, $100 stock. If the, you know, I think you got to wait till the next earnings report. I don't know if any upgrades are going to do it. And Dennis, you talk about timing and everything. I mean, I was so convinced over the weekend that we were going to have a pop on Monday, and then it was going to get faded hard. Like that, it had to happen that day.
yeah.
It had to happen Monday. We had to open up and, you know, put positions on accordingly. And I had to cover them, you know, and
All right.
I reloaded a little bit, but, you know, just patience. Like, yeah, I had the right idea, but just because of your timing. And then when your timing's off, you're like, man, I missed it. That's the hardest thing. That timing in the markets, in life, everything. Timing is everything. But we have gone 53 minutes here, and we haven't covered any of the new stocks. Do we want to cover like OKTA or Kroger?
Well, I did want to get your thoughts on this because if you look at some of the stocks that were reporting earnings last night, Joel just mentioned a few of them. OKTA reported, Snowflake reported, Splunk reported.
Tough environment. Yep.
Well,
worst.
but look at Splunk here. Look at Splunk. Splunk is not a super high growth name, right? I mean, if you just zoom out,
What's the difference between Splunk and Snowflake and I guess Snowflake?
I'm saying, look at the chart is the difference. Snowflake, the chart is very misleading because that IPO price was 120.
Yeah.
Remember that the IPO price on Snowflake was 120. It doubled on day one.
Yeah.
So that chart is very misleading. But look at Splunk. It's not a high flyer, and it's up this morning.
And that's, again, because that one's already been hammered. So they're looking at, they're taking money out of the stocks that haven't been hammered, and they're going in stocks that have, not. So this has already been hit hard. Splunk has been in the gutter. It was in the gutter from the last earnings report and never recovered. So expectations much lower. So they come in, they'd say something okay, stock holds up. Does it mean, Splunk's going back to 180? I don't think that. I mean, I feel like Splunk is AYX. Not different company, but they're all like AYX has had a couple disappointing reports, and finally, I've been saying AYX. I've hated AYX for a long time, and I've said it on this show. It's disappointed. It disappointed, and they give it, and then they rally it back for the next quarter's earnings, and they disappoint again, and they rally it back for the next quarter's earnings. Finally, it disappointed, and they kept hammering it. and which is deserved, in my opinion. So the company has been disappointed. You're coming back in now, AYX 7880. You're coming into a critical support level for it. So again, some of these growth names are coming into some good support. I feel like Splunk is a similar story. It's been hit, and then it's disappointed, and then they give it a pass, and then now it's been leaking here. They're giving it the pass, they give it the earnings, but is this going back to 170, 180? I think you got tough sledding to get back up. It could rally to 160, it could, but I think you're more fading the pops on these. All these charts, let's just break it down to the bottom line. All these charts are broken. And when you have broken charts, you have bag holders, people who are stuck, people who are hoping to get out. So as you get, counter rallies in these broken charts, there's selling opportunities. So just as much as, we've been in this relentless bull market, a lot of these stocks are in their own individual bear markets now. In bear markets, you sell rallies. In bull markets, you buy dips. In a trending market, you can kind of do both. As a trader, you can kind of do both. But I think, in this market, you're using opportunities to sell. I'll give you one more, and then I'll go back to Joel. I know I've been talking for a second.
No, that's okay. No. Because
Sienna, look at Sienna last night, CIEN. Somebody is bidding this up ahead of the report at $51.99. They're buying it $1.50 last night before it reports.
Different environment.
I shorted that stock. I shorted that at $51.99 last night. Yes, Dennis, the evil short seller. Why? Because it's giving me $1.50 lead, and it's the market environment that even if they beat, does it rally? So I don't know. I don't think so. I think there's a lot of scenarios where Sienna could go down on a good number. So I covered it already because it came in significantly this morning. But I took it intentionally, $51.99, shorted it, intentionally taking it through the report because I thought heads it loses, I think tails it loses. Sienna comes out and beats on the top, beats on the bottom, and what's the stock do? Immediately starts to sell off because it's not the market environment where this is a stock that, hasn't really been hit hard yet. So it kind of fits that bill. Now, again, like I said, I've already covered it, and it's coming back nicely. So I guess, the person that bought it might actually get their money back. But it went down like 48, 49 this morning.
49, 49 low.
What helped this is there was a market turnaround. And the market went green today, and then that makes people a little more comfortable. Oh, this was a stock that reported pretty good earnings. Maybe we should go buy this one. So it's built a little bit of bits.
Market psychology.
So
for the Splunkster, I see the pop to 153. Man, I'd see what happens at 150.33 first. That was yesterday's high. So if it takes that out, maybe we could see that 2-day high of 152.81. And also, I just want to respond to some comment someone made here. These comments go by so fast. They said, Dennis is judging Kathy wrong. We're not judging. We are just looking at the market dynamics and what's going on and how people are reacting to these stocks. She's a hell of an investor and she's had some great returns. Well, we're just trying to take the current market environment, what the money is doing, how it affected, and just we're not judging. Those ARCs are doing absolutely amazing.
She's done I didn't make 120%. And what was ARC up last year? 120%?
Something ridiculous.
I didn't make on my trading account. I don't know. I don't calculate percentages. The percentage would be absurd in my trading account if I tried to calculate it because it's a prop account. It's margins. It'd be in the hundreds of percent. It would be just ridiculously absurd. So I don't even ever talk percentages on a trading account because it doesn't make any sense. I'm using so much prop money on my capital. I'm making a lot of money because I'm using firm money, so on my own little, portion, it would be, so it doesn't make any sense. People always want to, what did you make on your trading account last year? I don't know. I don't have any idea what I made on my percentages. I know I made a lot of money last year. But on my portfolio, I can absolutely look at the percentages of what I did. And my portfolio wasn't up 100. It wasn't up 120% last year. You know what I have my long-term
She was up like 150, I think. In
150. That works in a growth environment. You're going to kill it. But you're going to have this in your long-term portfolio with those kind of strategies. It's going to be, you're going to have environments. This was a perfect environment for Kathy. Perfect environment. It's FOMO. It's risk on. It's high growth. Growth at any cost. This has been Kathy's environment. This has been her environment. It's not always going to be her environment. We're not always going to be in this, pay anything for, growth.
I don't know how many times we've said that on the show. We've said that 100 times on this show. It's not, these markets change. Guess what? Dennis and Joel, they could change their mind tomorrow. if the market changes.
Dennis can change it. Would change his mind after
As a
the
trader.
open.
Tomorrow.
But as
Yeah,
a
that's
long-term
right. Not
investor,
investors, though.
Yeah.
but as a
Yeah.
long-term investor, I'm trying to hold the course. Like I've got this,
Yeah.
portfolio that I've built over time. It's got Apple, it's got Amazon, it's got MasterCard, it's got a bunch of preferred stocks. People are like, "What the hell? You got a preferred stock paying you 6.5% a
Because
year?"
it's good.
You know why? Because in the long run,
pays.
the markets have, make 7%. If I can get 7% in a preferred stock with a lot less risk, that's a nice holding. And that's beating inflation. So I'm not a professional investor. This is not my job. My job is I'm a market timer. So my day job is a trader. I'm a market timer. I try to, move in and out. So my investment portfolio is, trying to just, beat inflation. I make the money trading, I put it in my long-term investment portfolio, and I'm trying to beat the market. Could I trade both? If I start trading my long-term portfolio, which I do,
Please don't.
which I do sometimes, the problem is that takes away from my regular trading.
Your edge. You'd lose
It
your
takes
edge.
away from my regular trading. I don't have the time to just sit here. I can't be both. I can't be a day trader and professional, money manager. I'm not focusing on my day trades. If you're making 200-300 trades a day in your day trading account, you can't efficiently manage your investment portfolio on the other thing. I don't even notice. Like I said, I had a stock taken over my long-term account. I didn't even notice it for 2 weeks.
I remember that.
I didn't notice it. For 2 weeks, it got taken over as a small cap name. So but I don't like to log into my long-term investment portfolio. So I wear two hats. I talk with trading, I talk with investing. A lot of people are just trading their investment portfolio, and that's a different story. Then you're a trader. If you're going to trade your investment portfolio, you're not really an investor then. You're a trader. So if you're going to be a trader, you've got to be able to, this is what we're talking to. You got to rebalance. You got to do some different things. You've got to stay even diversified in your own trading account. But there's risk involved here right now, and you've got to be able to read when it's turned. And right now, Kathy's out of favor. She might be back in favor next week. She might be back in favor an hour from now. She's oversold. The Kathy stocks are oversold. I'll say it. They're oversold.
I was waiting for if you were going to come and say that all day.
They're oversold.
There
They're
you
due
go.
for a bounce. I would sell that bounce, but they're due for a bounce. So those are my thoughts.
Can I give you a funny comment? Because some people have been asking me about Peloton, and
you haven't mentioned your Peloton on the show for a minute.
because there's some
He's been
severe
trying to sell
division
that.
in the investment committee. No,
All right.
severe. We can't even talk about this stock anymore. Okay, because because when we were hanging up here at 140, 150, I said, where are we going to cut bait? Right? Because I don't have many. I mean, I have some of these, buy at 25 and go to whatever. And she goes, I'll reevaluate at 130. Okay? And we had the discussion, and I don't know if this is symptomatic of a market top, but you know what she said? She goes, I love my stocks. She said, you know why?
Lisa's roaring kitty. What?
Okay.
Why?
She's been right.
Okay, but this is what she said. She goes, when they go up, I make money. And when they go down, I can buy more.
Oh,
Yeah,
man.
that's the mentality. But that's the mentality of what this market is. So I mean, and that's worked. That's worked for 100 years, really. Buy the dip has worked. If you're in the right stocks for a long time, and from an investing standpoint, it's not a bad gig. I just don't like paying 80, 90 times sales because I went through 1999.
I know.
You went through it too. When you buy, like I used to, I've said with Afria even, you got a pot, you got a greenhouse full of pot plants.
Yeah.
It's a crop. And why is this greenhouse full of pot plants worth $6 billion, but this greenhouse full of tomato plants is worth $40 million? It's a crop. So, I mean, eventually I still say there's something to come to roost there, but I've been wrong because you know what? APHA has continued to rip higher.
Look at
in this
CGC
environment.
down here, Dennis. Look at Sleepy down here.
But they've been
See?
hammered. But I think eventually all these stocks are single digits again. But I've been wrong. So I don't have a crystal ball to tell you the path to get there. I try to think logically with valuation. I try to take the
It
Warren
works
Buffett
out.
approach.
It just takes time.
I just know because I'm in Leamington. You look, greenhouse full of pot plants. Greenhouse full of tomato plants. The greenhouse full of tomato plants is worth 30, 40 million. The greenhouse full of pot plants is worth 5 billion. I can't fathom why. And that's why I don't invest in Afria. But I said that when it was worth 2 billion, and then it went to 5 billion. So well, I've been wrong. The story. You know why? Because story is hot. Story is what matters. Pot. Oh, everybody's gonna be using the CBD oil. So and they're obviously doing the medical side of it to a certain extent too. Great business. I just can't I can't wrap my head around that valuation.
I agree.
That's why I can't understand.
Max P says until you try smoking tomatoes.
There's a SPAC for that. There's a SPAC for that.
Oh, wait a minute. Where's my soundboard? Why?
All right, S&P. Oh, go ahead. Yeah, you haven't been on that soundboard. Go ahead.
No, it's not. Why is it not? Oh, because my volume is off, I think. That's why. Let's try that. That was a good one.
S&Ps, they went green, and we made a new pre-market high just by a little bit, but now we're back in the red, so probably going to be pretty choppy here until Pump and Powell comes on, but I don't know, incremental. I think even if you go up, you make that new pre-market high, you're going to have a little back and fill in too, and then we'll see what happens at 12:05. Triple D, any final comments or any more stocks that we want to?
I've pissed everyone off substantially enough now.
No, you haven't.
No, you haven't. No, you haven't. No, but
I gotta piss people off more.
Guys, forget about what's not working. Focus on what is working. Okay, energy. We talked about this at the top of the show. Energy, banks, value. It's working right now.
Time to ring the register and all that stuff. I was selling banks. I sold more banks yesterday.
All right.
I've been selling my banks.
Okay.
I had Bank in Nova Scotia. I sold that too in Canada. Canadian Bank. BNS is it's traded over here. This has been great runs.
You've been holding that thing forever.
Oh, it's been a bag holder in it. Look how far it's come back, though. Thing's making all-time highs, I believe.
Not yet.
Close
to
65.
It.
Close to it, though.
Yeah.
So, bag holder bailout market.
Oil, right?
Bag holders, they're all being bailed out on everything. This is the bag holder bailout market, and if you can hold the bag and you're getting your money back, or it's even better than that, you're making some money on some stock positions that have been absolute trash. Take the money and run.
Christian Gallagher thinks that Homer Simpson invested in tobacco-infused tomatoes. That would be interesting.
No!
All right. Quick programming note.
Disney's
Tomorrow. What? Yeah. Yeah.
Tomorrow, Dennis and I will be out longer on the show.
Programming note. Tomorrow at 9, in the 9 to 9:05 window, somewhere in that window, the CEO of Fubo will be on the show.
That's
David Gandler. If you have a question, email the question to premarket@benzinga.com. Please put Fubo in the subject. Otherwise, it's like going auto delete because we're getting a lot of emails. So put Fubo in the subject, premarket@benzinga.com. That's tomorrow at 9 o'clock. As far as today's programming is concerned, SPAC's Attack has an interview with another publicly traded company, APPH. App Harvest. The president of App Harvest will be on SPAC's Attack 11:15 a.m. Eastern Time. That's on youtube.com/Benzinga TV. And that's all I wanted to say.
Can I make a suggestion?
Sure.
So you know how you used to get the TV guide in the Sunday newspaper? Do you remember that going back all those days?
I do, Joel.
I remember that. I remember having to go to the TV guide channel, and if you missed your channel, you had to wait.
The whole scroll. Wait for the whole scroll to come on. Okay, I got to sit here and wait 10 minutes to see what station my show is on.
Joel, what's up?
No, because like the TV guide, you used to get that on Sunday and put it on the coffee table. You guys should put something up on the site saying, what time, what show is going to be on what channel. Because you're saying it, you're following me, you're confusing the hell out of me. Yeah. I just know our show is at 3:30. But you should do that. So then people just say you could refer to one site and go there and say, hey, this SPAC Attack with Mitch, this time, this site, instead of saying all these different things.
Yeah, working on it. Schedule is fluid, but we're working on that.
I know how it is over there.
Everyone, hit that like button. We've got like 300 likes and thousands of viewers. The ratio is not going to get me.
I think that's pretty good.
It's not going to feed me. That's not going to feed me. So hit that like button. Hit subscribe. Appreciate all the commentary in all of our chats. Appreciate our guests today, Buck and Marc. If you're listening to the show via podcast, which you can, of course, every show is available via podcast, please remember that all the information from our show is meant to be used as informational purposes, not for investing or trading advice. Going to say goodbye to Joel and Dennis for now. Joel, I'll talk to you at 3:30.
Okay.
And Dennis,
Will
have
do.
fun pissing people off. Okay. The link to get technical is in the description, and it's pinned to the top of chat. That show will start at 9:30. As I said earlier, if you want the all-day stream, hop on over to Twitch and Twitter. We are streaming all day. It's one continuous stream, Twitch and Twitter all day. If you want individual streams, YouTube or Facebook. That's we're trying to make everyone happy, so that's what we're going with for now. We'll take some more feedback as it comes, but that's the plan. So all day stream, Benzinga's channel on Twitch or Twitter, separate streams, Benzinga's channel on YouTube or Facebook. Again, Get Technical with Neil starts in about, it's supposed to start at 9:30, but they might be going live soon. In any case, Mitch and I are going to hang out with you for the next few minutes and just kind of, shoot the breeze. We didn't take too many questions from the chat. Which Twitter, Latoya? Benzinga, here, you know what? The link has been pasted, but let me grab it again for you because I want to pin it in chat as well. So I will get you the link to our all-day stream on Twitter. What's the name for Twitch? It's just Benzinga. It's just Benzinga. But let me. I know those links were pasted in chat earlier. Let me do that for you right now. Let me find them. Oh gosh, that's the problem with Benzinga. You can't search for anything because it just returns an article. Because we write about everything. Okay. In the meantime, I'll bring Mitch on and let's just hang out and we'll take some questions from chat. We'll look at some charts. And I didn't even get to bring up Google. I want to bring up Google today because Google said yesterday that they're basically going to change how they sell ads, how they track you. They're not going to sell ads anymore by tracking you around the internet. They're not going to track you from site to site, which is basically that's how people target, right? That's why almost half of all money on digital ads gets spent on Google because of that targeting feature. So that's very interesting. I'm very curious how that's going to affect Google's bottom line going forward. And I'm working on getting you that link to the Periscope. 1 second, guys, because I have it up, but I need to find here. There we go. Oh, that's me. That was me. There's the link to the Periscope. I'll pin it in chat right now. The all-day stream. There it is. There's Twitch and there's Periscope right there. The Twitch is pinned, and then in a moment we'll pin the Periscope as well. So there's your source for the all-day stream. Okay, I think I got that taken care of. I hope I answered questions. If I didn't, I'm sorry. Keep asking them. You can email premarket@benzinga.com. That email goes to all of us, by the way, even though those guys don't even look at it. But I look at it every day. So you can email. Again, email that account if you have a question for the CEO of Fubo tomorrow at 9 o'clock or 9:05 Eastern time. Okay. Mitch, are you here? You're here, I think. What's up? Oh, you're on mute. I think on the stream here.
There you go. There we go. We should be good now. You should be
what's
able
up?
to hear me. How's the audio level? Is that good?
We're good, man. Everyone, guys, Mitch just moved into a house. Mitch is a homeowner, baby.
Yeah, baby. Hey, working up. Wait till next week, guys. I'm gonna have some really good kind of things that I'm gonna be adding towards my camera view. Got some lights, got some things, but got to work on that this weekend. But let's pull up the gappers. I'm pretty sure everyone's getting ready.
If I had an applause soundbite, I would play it, but I don't have an applause soundbite for you. I'm sorry, Mitch.
All right, so guys, one thing I definitely want to mention, and I've talked about this level countless times, guys, that 380 today, at least for technical traders, I think that's what they're watching. I've heard multiple technical traders that just kind of rely on technicals calling out this spot, this 380. So I really think it's a line in the sand today. One thing I definitely mentioned, if we go to the 15-minute, you're going to see that we actually broke through it in the morning and then have recovered that 380. I'm going to be watching that 380 towards the open. If we can hold that 380, then I would be interested maybe taking a little bit of some dip buys, trying to get some swings back up. But if we can't hold that 380, I definitely will be holding my cash. One thing I did do yesterday is I covered a couple positions just because I was worried about the market taking a dip again. And that saved me a decent amount of money, at least on the risk side. And now I have potential to get back in because now I have cash. And this is why you hear the statement multiple times, cash is king. Because sometimes cash is king. In moments like this, if you don't have any cash in your portfolio, you get to the point where you're just watching the red. And that becomes very difficult to kind of stick around. One thing's 1 day, 2 days, 3 days, fourth day taking a hit, you start really feeling bad. So I know there's a lot of traders watching the SPY today, and we'll keep an eye on it. But let's get into some individual stocks here. All right.
And also, Mitch, I just want to alert you that I think the guys over on Get Technical, Neil and Aaron, I think they're going to go live, but we're going to hang out here and we're going to switch over when Mitch is done going through his thing.
Yeah, don't worry, guys. I'll go through a couple of the stocks here on the gappers list, and then you guys can go over to Get Technical. I mean, pretty much you hear the same stuff mentioned a lot of times: support levels, resistance levels, and I always love how Neil approaches it and keeping it simple. And one thing that too many traders have a constant approach that they need to get more and more complicated, and sometimes the simple strategy is the one that works. Definitely, let's take a look. Let's see if there's any one ticker that you guys want me to take a look at. Definitely put it in the chat because this time's all about you guys.
I've seen a few snowflakes in there, and I don't mean that like derogatory. I mean like people talking about the stock snowflake.
Hey, well, I am in Colorado Springs now, so and I expecting some snow today, so you never know, right? So let me take a look here, see what we got on the yearly chart. One thing you can clearly see on the yearly chart is that it's coming back to support. Really, if you kind of look at these levels and you can use all H for you Benzinga Pro users, that way you can start seeing the support. And so this like 240 level, we've seen multiple lows come here on the weekly. So you got last week a low of 242.98, and then right now we got a low of 243.01. So let's see if we can get towards that 240 and hold. I would like one more attempt to break that 240. If it can hold that 240, then recover, let's say maybe to 250s, 260s, then I can at least have a risk profile and look for that move back up. But definitely, you got to be careful with this one because it could do what's called the undercut and rally that we've been seeing in a lot of IPOs, where like kind of the same move that Rocket did, where it broke kind of that IPO price, went lower, and then immediately recovered. So just be careful there in Snow, guys. It does have some support there around 240s, but could break and then do kind of that undercut and rally move that we've been seeing a lot of IPOs do.
A few more from the chat here. I'm trying to do stocks that we didn't cover in the previous hour, guys. So, Mitch, a lot of people are. I saw someone mention Etsy. Maybe it was the same guy. Ryan asked about Etsy. Ryan, same story, man. Etsy's a high flyer. It's up like 700% in the last 12 months. All right, Etsy's been a monster.
E-commerce.
It's been a monster, and the stocks that have been monsters are out of favor right now. You asked what happened earlier. You asked what happened to Etsy. That's what happened to Etsy. Etsy is grouped in with the ARK. The hot stocks right now, ARK, Etsy, e-commerce, Zoom, all these names that were the stars of last year are getting punished right now. Nothing fundamentally changed with Etsy, but that's what happened. The story is cold for now.
Yeah, I mean, if you look at the chart of Amazon, we talked about this one at the close, and Joel mentioned it. It's not looking good, guys. It's pulling back off of a great earnings report. It's at support. So today I'm going to be watching if Amazon can really crack down the big boys. If the big boys keep cracking, I think we keep pulling the market down. So pay attention to those big boys like Amazon, Apple. If you see those kind of having a bounce back day, then maybe we can have that bounce back, but look at the charts. And if you look at the big boys, they're all pulling back towards support. So just keep your eyes on it. See if we get some bounce. Even Tesla, If we look at Tesla, it's been coming back towards support. And the question is it going to find that support near that 600 or 650 area? Somewhere in between there, it has some support. Let's see what happens here. I know that Kathy's been adding to his position, so we'll keep an eye on it. If you guys didn't catch the interview yesterday, then you guys definitely missed out.
I was going to mention that. Yep. I'm going to paste the link to that video right now in chat so y'all can see. But it was a fantastic interview.
Yeah, just to recap some of the things that were mentioned, at least the stuff that I literally focused on was a lot of the trend talking that she was mentioning. So she mentioned a lot of kind of the streaming services also. So she mentioned Roku, and she also kind of mentioned Zoom as one of those stocks, but Roku doing a big pullback also. I'm interested to see where Roku can kind of hold off, because it looked like we were heading towards 500. Like, it just looked like a magnet towards 500. So if we can maybe hold around 350s, 325, it will get interesting for me, because it could potentially get back up towards 500, and that's a significant gain. So I'm going to keep watching this Roku.
Mitch, do we see any buys from her last night?
Do we got any recent buys, Spencer? Can you pull?
Yeah. She was buying the dip. She was buying the dip, as she's wont to do. We know that happens. Let me pull the email and I can tell you exactly. So ARK Invest made 44 transactions yesterday. Okay, 44 transactions.
All right.
And 32 of them were buys. Way more buys than sales.
What tickers?
We mentioned this earlier. We ran through a couple. So she bought a lot of Zoom. She bought a lot of Palantir. She bought a little bit of Tesla. She bought a lot of you software, ticker U. Bought a lot of you.
Palantir.
Yep, Palantir. She bought a lot of Teladoc. She bought. I mean, she was doing a lot of buying. She bought nothing new though. She's buying the stock she's been buying. She bought
everything that's on a pullback.
She bought a lot of Butterfly, BFLY. She bought a lot of
Spencer. The chat's getting annoyed with you right now.
Why? What'd I do?
They said don't forget the link to the interview.
Oh, sorry. Yeah.
Anthony Tucker. So
wait, wake them up, chat.
Yeah, wake me up too. But guys, I'm just coming in for 1 second. Mitch, Spencer. There's been a lot of mentions of our interview and a lot of other publications. If you Google Cathie Wood, you'll see Reuters, Business Insider, Financial Times, a bunch of stuff like that. But they're waiting for the Kramer clip. That's the thing that's going to go viral, but it's still not there. I don't know why Mitch refuses the Kramer clip. Why?
I don't refuse it.
You don't? Well, it's going to get stale. It's going to get stale. I went to Kramer's Twitter. I thought he was going to war against her, and it would have been perfect for Squawk, the morning thing, but we missed it. So,
well, it seemed to me that Kramer didn't know what he was mentioning, because the way that Cathie responded, she said, "You can't do that." So,
well, I
know, but we need Kramer to respond on the morning show right now. And now we missed it, so maybe we can put it out at 3 o'clock or 2 o'clock, because if you put it out now, you'll miss the thing. It has to be for the morning show with Carl Quintanilla. Because I'll send it to Carl. Carl Quintanilla is my friend. I'll have Carl Quintanilla on a Raz report.
I think what Kramer was saying, but I'm not entirely sure, is that she should make a closed-end ETF, which you can do, and basically just close it out to new money, but. I don't know why she would do that. I think that's what he was saying, but I'm not sure why she would. And I don't know why she would do that. But closed-end ETFs do exist. I just don't know why. She would do. Okay, I posted the link to Cathie Wood in the chat. Let me pin it. I'll pin it to the top, so y'all can see that.
The Sports Radar. They're a data company. It's like Benzinga, right?
Yeah, even better.
It's basically market data for gambling, for sports betting. Yeah,
you're talking about a company that really has some big supporting. It has Michael Jordan behind it and Mark Cuban. Oh. One of the things that I noticed there would be that Mark Cuban really has that connection with sports, because being a sports owner, he sees the data being used, and I think that's why he became an investor in Sports Radar. So it will be an interesting, and just to give you the ticker name that's moving with, guys, that's HZON, guys, Horizon Acquisition Corp 2. I could put it up on the chart here. It's looking good right now. It's probably the only SPAC that's kind of looking good. But I was watching this one, and it was big on my radar, Jason. Sports Radar is massive.
I know. I've been watching you talk about it. It's just interesting. It's gotten so big. and I know the industry pretty well. So it's interesting how big it's gotten. HZON, it's crazy.
Yeah, and we're going to continue seeing kind of the sports data, sports content, and it's all really coming from the gambling, right? I think that's really where it's driving the revenue from, and how these new companies and these companies are going public, because they're seeing the kind of sports growing actually from the sports gambling. It's actually affecting the viewership, and more viewership is coming because now you got that legalized gambling in a lot of states.
You know what I wanted to mention earlier and I forgot? Joel, Mitch, can you pull up Viacom, VIAC? I think this could be a short here.
Why?
Paramount Plus launches today.
Interesting.
Okay, so look at VIAC. This thing's been a beast.
Yeah,
and I know it's not just VIAC. I know it's Discovery. I know it's all these cable providers. But Paramount Plus launches today. I'm saying that could be the catalyst for a buy the rumor, sell the news type of event. And today's the day. They've been advertising like crazy for this new streaming platform. Today's the day. I'm watching Viacom very closely.
Yeah, it's good to mention. I mean, at the end of the day, we've either seen a rip on the news like we saw in Disney, or this one could be the same kind of, rumor gets in, everyone prices it in, and it gets towards the level that it's just too high up. And
I mean,
news
if you even zoom out, Jason, what's up?
Well, no, I want to respond to a guy in the chat. I didn't answer earlier, and then I felt bad, so I'm going to answer.
Okay.
He asked if my dollar cost averaging down. So he's asking if I'm buying stocks as they fall. And like Kathy, I do two different things. I sell some of my weaker ones. So CLSK, I've been long for a while, and I sold it. I sold it like 3 weeks ago. I trimmed down a lot of positions, and then the ones that I really wanted to own more shares of, then I went, much larger in. And that's what I've been doing, because I want to be able to pounce on stuff when I see opportunity. So I own a stock like OSW, guys. It's like if cruises come back, I think they provide the spa services on the cruises. Travel is coming back. You guys know Save is one of my biggest positions, and I was down 15% on it, Spencer. Now it's up, I think 35-40%. I do have positions that are down. I do have positions that are down that I wish I would have hedged more, and I didn't do a full hedge, which it is what it is. But I take the market when you guys, you have to understand, we're going up straight, Spencer, for multiple weeks in a row. About 2.5 weeks ago, I felt a little bit of a shift, which I could be wrong on all the time, because when I sold in the past, the market still bounced up, and it could again. Okay, it could again. The market is the market. Who has cash? How are jobs? Do your friends have cash? If your friends have cash, the market will go up. This inflation story and rising rates, I think, is overplayed. I don't see the inflation story as much, Spencer, but I will say this, Spencer and Mitch, in housing, there is a little bit of this. You can't buy a house. I have a friend.
Ridiculous.
Oh, are you looking for a house too?
Yeah. No, Mitch just did. It's insane.
Well, one thing I did right now is, guys, I couldn't even find one that I wanted, because the market is so hot here. Literally, houses are going off and being sold in 2 days. 2 days.
Yeah.
There's no supply.
But it totally, and I disagree, Super SPAC man. I disagree with you. Travel will come back eventually, but it seems a bit overdone to me and far too soon. No, this travel, you guys can't imagine how hard it is to get a hotel room at places right now. I mean, if you can find luxury stocks, you'll make killing on them. Yes, you can buy the big hotels, Marriott or MA or whatever, but find luxury, like things that move when travel goes up. I am telling you, you cannot get rooms at these places. Everything is booked, from Miami to Florida to Puerto Rico. Everything is booked come spring, and I mean everything. If a room normally costs, let's say, $500 a night, they are $2,000 a night right now. You cannot get a room. So I am telling you, there are some expectations in there, low expectations, that those stocks are gonna hit the cover off the baseball. I guarantee it. So SPAC man, I think there's a lot of plays you can make right now.
Really, I'd have to agree with you, Jason. One thing that I've been mentioning, and I mentioned about 2 weeks ago, that the cruise lines and the airlines started looking better. And one thing I noticed, the cruises started doing all these commercials on TV. When you start seeing the ads start coming, I started looking for the catalyst. But one thing that the market tends to do is think about 6 months out, right? Or about a year out. And that's what I'm starting to see. I think that you're right. You know, you're starting to see those travel stocks move. You're starting to see different stocks look ahead.
And Mitch, I didn't do the cruise stocks, so people are talking cruise, but I know in Puerto Rico there are no hotel rooms available. Like I literally, and so there's
it's because Ted Cruz booked them all. Oh no, that was Cancun. My bad. Sorry.
Isn't that your uncle?
What kind of a defense is that? I don't even know what kind of response. Oh wait, real quick, it's 9:29. Let's wrap it up so we can go to Neil Hamilton.
Yeah, let's wrap it up. We'll wrap up. One thing I will mention is Carnival is having a good day.
So. We get that Kramer clip too, by the way. And then we got Buzz going, hey, should we bring Portnoy on today? Portnoy said, I can get Portnoy on if we want to talk about the Buzz ETF.
Let's do it. We'll get him on the Power Hour.
Yeah, I don't know if he talked about me on his show yesterday too, which was kind of funny. And no one even tells me. I saw it live. I was like, holy shit. And he was talking about me. Portnoy.
All right, guys. But before we get on out of here, definitely smash the like button below. Hit the subscribe. This is where you guys see all day streams that we go into every content, every niche that you guys want to be talking about. Crypto. We're going to be talking about SPACs later. We have a great interview. We're going to be doing technical right now. Neil's nailing that. We got it all, guys. We're going to do a crypto show today.
Smash that like. Share it with your friends. Smash that like. Come on. Share it with your friends. Get the world out there. Look at all the videos. Mitch and Spencer working their butts off, getting organized. Let's go. Smash that like. Check our YouTube channel for highlights from the Kathy Wood interview yesterday. And go take it away, Mitch. I'll see you tomorrow. Peace.
We'll see you next, guys. We'll see you next time, guys, on Pre-Market Prep. And like always, smash the like, hit the subscribe, and we'll see you next time.